All right, this is a zone review of the zone methodology for the momentum stocks room. And for the example today, I'm going to use P&G, PG, Procter and Gamble. It's been a name that we've had on our radar for a few days. And if you look at Procter and Gamble on the daily chart, you'll kind of see what grabbed our attention. All right, this name has just been trending up nicely for a while now. It's had a couple of swing lows in it, and then just a continuation of the trend. So that looks good, and look what it did these past few days. Came right down here to this pink 100-day moving average. So that's what grabbed our attention. And then we look, of course, at our zone chart. So for the zone chart, we're using the 30-minute candlestick chart, and we have 3 moving averages that we take into consideration. The yellow moving average here is the 7 exponential moving average. The pink one you see here, that's the 20. And then, of course, we have the blue one, that is the 50 EMA. Again, exponential moving average. And so when we see these 3 line up as they have, right, nicely stacked, right? You want the yellow on top, the pink in the middle, and then down here at the bottom, the blue 50. And so we like to look for, like we saw here, some upward momentum and then a pullback. What we really like, though, is that crossover, like we saw back here, right? That's a good indicator, something we look for as well. And so once these line up, we do take into consideration the PFE down here, polarized fractal efficiency. We like to see that above 0, nice and high. Right now it's about 88. That's a good sign. We also have the DMI, stochastic here, right? DMI, that's up. You can take the DMI into consideration. If it's green and you see that arrow there, DMI is moving higher, then yes, that's just another indicator that you can use that will confirm the entry. But you don't have to, if it's pointing down, not necessarily. As long as everything else lines up, you're good to go. All right, so what do we look for? Well, when we got in P&G, we got in on this candle right at the 11 o'clock hour, right after this upward green bar. So what we notice here, it came down to the 20 and then bounced, right? So that's an indicator that, hey, this could potentially continue this momentum up, right, as we've seen on the daily chart. So what we're doing is we're basing our entry on this yellow 7 moving average, the high of that entry. So what we'll do, since PG is a triple digit stock right now trading 123.01, then we're going to add 25 cents to this 7 line, wherever this 7 is. And so that gave us 123.68 at the time, right? 25 cents plus the 7, 123.68. And then the 20 was down here at 122.24. So that's our zone. Just that simple, right? Again, adding 25 cents to the yellow 7 EMA, exponential moving average. That's the height of the zone. That's the highest you can pay for this stock. And then you can go as low as 122.24 at that time, right? It's different now, but we're talking about when we entered into this name. And so we have that. Now we need our stop. Where's our stop going to be? Well, we will use the 50 here, and we'll subtract 25 cents from the 50-day or 50 exponential moving average. All right, so at that time, our stop was 120.18. That was 25 cents minus wherever the 50 was. And so that's how we got our stop. Now we need a target, right? What's going to be our target profit? What are we going to look to take off? Well, what we do is, based on the top of the zone, the 123.68, we're going to take our target, take some off, take some profit, 1% from there. So 1% from 123.68 leaves us with 124.92. So that's where we'll be looking to take at the most half of our position, right? Half of our position off will be taken off there. And then what will we do with the balance? Well, we'll continue to trail our stop. What we like to do is, once we hit our first target, we like to move our stop up to break even. And then from there, it's simply all you can eat, right? Sometimes we'll watch a name, it'll continue to move higher and higher for us. And depending on what's going on technically, previous highs or something setting up, then we will look to maybe take a second target. But that's just, as you know, we kind of play it as it goes, as the stock trades. And if we see something there, we'll definitely take another target profit. But for the most part, we're just trailing our stop. We trail our stop based on either the 20, right, the pink moving average. Sometimes we'll get a little aggressive and base it off that as the stock continues to move higher after our initial profit target. And if we want to get super aggressive, right, a little bit more aggressive, we'll even use the 7. Right, depending on how that name is moving. And so that is the basics of the zone trade. All right, that's how we're seeing it. That's what we're looking at for our zone methodology. And then when we're looking at short, we were looking at Square earlier. Let's pull up Square. Square ran down on us but didn't get filled. But the same thing applies to the short side, right? Notice again how the moving averages are stacking up, right? On the for short, we're going to look for the 7 to be at the bottom. Then right in the middle is going to be our pink 20. At the high there, it's going to be the blue 50. All right, so we're basing our entry off of the 7. This stock, Square, is a 2-digit stock, so we're just going to use 10 cents. Right, so right now, Square is the 7 is at 59.69, so our entry would be 59.59, or right now 59.58, since it ticked down on us. All right, then that would be the bottom of our zone entry, right? So you want to sell no lower than 59.58 at this time. Up to the top of the zone would be 60.27, and we just take that 20 where it is. We don't add or subtract for buys or sells when it comes to the 20. We just leave it as is. And then our stop, again, based off of the 50 EMA, that's going to be 60.96 in this case, because right now the 50 is at 60.86. So we're going to add 10 cents to the 50. We add it to the 50 for a short. We subtract it from the 7 for a short. And so that's what we look for, and everything converts, right? PFE's down, look at the DMI is down, so everything is a green light for us. We just needed to pull back to our level. Now we were looking to get in back here, but I think around the 10:30 time, but market never got to our entry. We adjusted down, still didn't get there, and it continues to flush on us. We cancel that order. So that's what we look for a short, and the same rules apply. 1% off of our entry to take profit and continue to trail as hopefully the stock would continue to move for us. So again, that's our zone trade. Just a quick review for you guys. Anytime you have any questions about the zone methodology or a trade, or if you see something that you think is a potential zone trade, and if you're trying to understand the methodology for yourself, bounce the ideas off of us, right? Once the questions come flowing in, you help out others in the room. They may have never thought of that question, so please always feel free to either ask myself, Patrick Hammond, or my partner, Charlie Moon, any questions anytime. All right, guys, and so that will conclude our zone methodology.